Sunny afternoon to everyone. As Fadi said, thank you very much. It's one of the challenges the organizers has put in place to do a presentation, especially after having lunch and mouth-watering dessert. So I hope I'm not going to dose you off, but to combat that, I kept my slides simple as possible with pictures and numbers. And let's see how is the effect in the Q&A session, how intense is going to be on that. So before that, let me introduce myself once again. I am Naresh. I work for Renewables. Juvi is 100% a German company, and we have done about 3 gigawatt of solar and wind assets. Again, I have to do this about my company. I need to explain. It's in from Frankfurt. It's about 40 kilometers, a place called Wurstadt. And worldwide, we are operating in most of the continents and most of the countries. Again, this is not a marketing about my company, but I need to do marketing because I applied my leave and it is not yet approved. So I think it's captured well in the video actually on this. So with that, let me kickstart my presentation with the title called Tilting the Balance. It is going to speak about the outlook on distributed generation solar PV investment returns towards low carbon prosperity. So let's see how we are going to tilt the balance and outlook, especially to attain the low carbon prosperity. We all read and hearing the last couple of days about carbon, climate change, thesis, a lot of brainstorming topics. We have gone through that. But still the message is there is something is missing and the action has not been taken by certain stakeholders. And why is it and what is that? It is what it is explored. That's the fundamental game changer of discussion point is going to be there. So let me ask a question. Is your country risk of a sea level rise? How many of you coming from a coastal background or coastal area? Fantastic. Lovely. I know things. So have you heard about anything on this topic called sea level rises where you live? We all know that greenhouse gas emissions is happening and climate change is happening and all those things. Are you coming across this terminology, or are you getting scared, or are you getting excited or getting concerned about the sea level rises there? Is there an answer is to the floor? Is there? Have you heard about it? Anything on that? So this is creating a level of a serious problem actually. If you could see that, this picture is taken from Miami. It's from Florida, and both is from US. The reason I've chosen US is not because of certain political sentiment. It's more towards on largest economy. That's the reason I took this picture. There are other pictures from many parts of the globe. Globally, we can show about how flood risk is happening actually. So this is a current sea level, and based on that, how the land looks like. And eventually, if we do the simulations, if there is an impact on the greenhouse gas emissions get trapped, how the sea level impact could be and how the changes can be, it is sort of a simulated effort it is there. So this sort of countries which are in the coastal areas, they started simulating and see how this is going to be impact on that. Now if you see the next slide on this, what's world's top most risk countries which are risk in the coastal level, and you can see that China still ranks top of the list, but the population is exposed to about 50,000. And if you see on the other side is still it is graded, Netherlands comes in terms of percentage-wise exposure. This is an alarming slide on alarming information for me is because most of the countries is where my company operates or where I am working and I'm exposed to the sort of a sea level risk. Just to be more specific, the place where I come from, currently living, is also from Singapore. It is currently measured by environmental, about 8 centimeter of sea level rise has been happened ever since 1993 to 2016 actually. So to resulting this, combat this, already construction people and construction design foundations and other things is all been elated for more than 1 meter and 1.5 meters, they started concentrating on this. So the point I would like to stress upon here is climate action is there, but the panicness is not there for everybody, because only in the coastal region they have that, they are getting exposed to that, but action need to be taken on that actually. So with that, let me move to the next slide. what are all the strategies to combat that? That's what it has been laid out. And there are 4 strategies has been given by environmental specialist and regional climatic specialist. The first one is improving energy efficiency. I think our colleagues in the morning we dealt about a lot, and reducing carbon emission from which is going upcoming modern conventional power plants is going reducing carbon technologies, and that's what is being adopted. And third is developing and deploying cutting edge low or no carbon technology, which is solar PV and wind. And obviously the fourth one is encouraging collective actions among government agencies, individuals, business and community. So these 4 strategies has been laid out, and each one has got its challenges, and the challenges we discussed this afternoon also, this morning also, I'm sorry. What's on energy efficiency and all these things we dealt about a lot. But I'm going to touch, in the interest of time, is more towards on the third challenge and also a little bit on the fourth challenge. What as a community or a stakeholder need to have a collective or a concerted effort need to be done, where the mindset has to be changed and how you tilt the balance. That's the point I would like to make an emphasis on that. So these strategies, strategies is point is making strategies and effectively getting implemented is one of the challenges is we are going through that. And the challenge what you can see is, it's just a simple analogy. What I would like to present is on a circus versus energy companies. If you see historically and contemporarily, the circus industry or the circuit companies, they used to set up in the cities, and where they lay for 3 or 6 months, and they attract people and they entertain the local cities and the communities, and that's how it was happening on that. And that has moved traditionally into theaters, which is multiple areas like Cineplex is currently what we are having, and people are enjoying in the communities also and getting entertained. So the point I would like to say is currently power plants is going, utilities is getting into multiple chunk of little bit within that community, or this is called CCE. We'd also talk about this morning also on this. Currently the trend is going on these directions, where you are getting your generations where at the place where you produce, it is being consumed. And this is what it is called distributed generation. And it is distributed generation is where it is terminology wise, is where you consume your power, and that is where it is being produced actually, to put it in a simplistic thing. So that's the in a small, simpler way of putting that. And why we have to do this is, first thing is it is modular. Wherever you want to increase the capacity, you can increase depending on the countries or the communities where it has to be, the demand grows, you can expand the capacities on that. And ever increasing needs of electricity, as I said, it was because of the demand, this you can create more number of distributed generation. More important is the price volatility in traditional markets. Utility companies is always in the uptrend and floating. Yesterday we also saw in the field trip we saw that prices are floating, prices are fixed. Sometimes it is more volatility is there actually. And there are attractive cost incentives like net metering energy and feed-in tariff is there. That was the spirit it all started, but it is going to be sustainable or not, that's also another question. And there are pressure on companies to set and achieve reduction targets. That's why companies like multinational companies like SAP or Google or Apple, they started looking into embarking onto renewable energy on their data center and everywhere. So with that, all these things is there, although there are benefits are there, and economic as well as on climate benefits are there, but there are a lot of challenges there to get these type of projects. Just to let you know, this project is one of the stadium. It's a place called Mainz from Frankfurt, and it is my company has built this about 840 kilowatt system. It is a community based project again. It is called distributed generation segment. The point why I put it is this side of projects where it has to be put on a rooftop or onto be into SMEs. We talked in this morning. SMEs or in the community, it has to have more volume of projects, but the challenges are there. That's what it is. I'm going to talk on the next slides. The challenges is on distributed generation barriers is multiple perspectives on the technical, is basically some of the buildings having a resistance, whether structurally, whether they are able to withstand or not. This is always a mind block for consumers. And so other aspect is power flow dynamics, whether power is going this direction or whether are you consuming more or consuming less. So that's more on the technical aspect. It has been resistance are there. And the policy aspect is subsidy restrictions. Most of the governments, they allocate projects based on FIT. They are not really able to meet or able to sustain it. What happened in other countries like in Greece, and they pulled the tariff, and even Germany, it has been pulled out currently on that. And explicit lack of awareness on 2 degrees actions. Policy, most of them, COP, Paris Agreement has been signed on a government level. On the municipal level, they doesn't know how to create actions onto it actually. So the next aspect is on the administrative aspect is also challenges. Standardization of contracts. If it is a particular country or a particular province or a region, the agreements are not same. So it's not legally enforceable to have more number of projects. That is one of the challenges is also there on the policy aspect and administrative aspect. And commitment of long lease life, whether the building will be able to sustain for long-term period to honor the contract. That is another challenges on the administrative aspect. And what is more important is on the financial aspect is basically imbalance on high equity returns expectations with the carbon benefits. The financiers definitely are not looking into the aspect of what is the carbon benefits or carbon reduction benefits, more towards into a high equity return expectations, which is standard across the globe, is being applied on that. That creates a lot of headwinds and bottlenecks in having this type of distributed generation growth, at least in most of the countries. I know some products in US, it has become successful because of the tax credits and other things there, but it is not been, it's always, even China lacks the planned distributed generation compared to the, what they have been planned. And if you see the utility scale is still more, but distributed generation is still lagging behind the target actually. Now they are trying to accelerate, but because of these hurdles, what they face through on that. And lastly is what sort of a business model and financial products are prevailing in the market is, again, it is also, there is no one size fits the all, one size fits the purpose. It's not there, and that is also another challenges on that. So with that, what I did is I just took into, thanks for warning. I put a financial model. This particularly is two business case from Malaysia I took. One is project with 1 megawatt, another 450 kilowatt. This is completely without feed-in metering. What I did is basically I took the retail tariff and I able to run. The returns are very single digit and 14 reject. Both these projects were rejected actually because the returns are not up to the level of expectations. So what I did is just collect the data on the spot markets of retail electricity. This is pre-tax and pre-subsidies and other things. So this is the base rate has been taken from US, Malaysia and Singapore and Philippines and Germany compared. So the message what I would see is not comparing which is higher and which is lower. What I would see is there is a continuous growth or increase in the energy prices there with a compound annual growth rate at least about 4%, 2% in most of the markets. You can see that. Again, if you add up another subsidy altogether, this CAGR growth is more on that actually. So with that in place, I go back to the model and I plug it, and with the assumption what I say is 3% I have taken on the compound annual growth rate and give a further discount to your existing retail tariff what you are paying, and you offer a cheaper electricity price from the solar source. The model looks different. The equity IRR, it becomes double digit, and it is to a certain extent with a pre-mindset of 15% IRR. At least it looks better 10% and 17%. It is enticing to a certain level to the investors or the financing community on that. So with that, what I would like to summarize is financial institutions operate on a risk and return basis. It's not everywhere you will be able to get a standard double-digit IRR or a very stable IRR. You need to imperatively, it is need to consider what is a reasonable outlook. And that's where you have to tilt your balance of return expectations in terms of what is the community benefit you are giving it to the community, that's what it has to be taken into that. It is not always that you need to look on double digit of 17% or 20% IRR on that. So lastly is sustainability, sea rise, 2-degree collaborative action has to come from individuals, business and community with the future perspective has to be taken into consideration. With this, I will finish and over to the floor for Q&A. I hope I'm on time.
Okay, thank you. Naresh warned us about the greenhouse gases, the global warming, the possible increase in the sea levels. Although some important players, they don't recognize this risk. He shared with us his experience or his learning about Singapore raise in sea level by 7 centimeters within a period of 25 years. He talked about the strategies, improving energy efficiency, reduce or lower the carbon emitting power plants, to encourage collective actions. I like his demonstration for the distributed generation, moving from circus to theaters. This is a nice demonstration. And finally, he presented to us the challenges of distributed generation, technical, policy challenges, administrative, financial, and he demonstrated a model about the usefulness of distributed generation. So I'll open the floor for questions to Naresh.
Yeah, sure.
From all these challenges, in your opinion, which will like the most bigger one, the most
Sorry, what is that?
From all the challenges that you presented, in your opinion, what is the one that takes more effort to combat?
Okay. For all the challenges I think I mentioned, technical and everything, you can easily overcome. The biggest answer is not found out is financial. No matter whether we talk about this morning about energy efficiency and all those things, financing is going to be the game changer actually. And there is a lot of funds available globally, but it is not really distributing to the level of realization of projects actually. And that's where it is there. You can still see many of the roofs is still vacant here actually. You can see that shows actually. So financing is going to be the biggest challenge on that. And that most of the finances always they say, yeah, you have to put this and other thing is there, but when it comes to real deal realization actually, they have a very high double-digit IRR mindsets of that. I compromise on the, I mean, there are there, I wouldn't say generalized, but there are there, but it is a really uphill challenge actually on this. Thank you. Yeah.
It's, you know, as a person who's investing money, he's going to just look at, if I invest here, I will get 7%, if I invest there, I get 18%. I don't even look at
Right.
And it requires, so they don't think about the benefits that the
Exactly.
society would get, and somehow you need to put a price tag on it to make them accountable for that, and you know, they should take that into account when they look at the returns. So 7% plus this. Could a policy change from the government to, for example, the companies are given a target to say you need to have this much of CO2 reduction. So similar policy for people from the policy side of things, maybe they can think about some sort of an instrument that would convert some of these added benefits into money and show that as a part of your project returns, and or you know, the investor has to gain that as well, rather than just the 7% money as a return. Otherwise, they are not going to be really.
It is really, I mean, I think at least in the region where in APEC, I work with a lot of banks and ADB, multilateral banks and other things. It's very hard to bring for the guy who put the money and government to bring in, it is too really hard onto it. Mostly, generally they go on a project specific on that. Now, adding to your question is on this, at least just to give a quick example on Singapore at least, when they want to deploy more solar because they committed for COP21, another thing they want to accelerate solar, they introduced already one side they want to do that, but they also put the stroke is other side is something like exit fee, what you said, right? In the morning is exit fee, what they charge is the grid charges they put. Whatever you put solar onto it, you have to pay some grid charges because you are feeding to the grid actually. That's again, it deters the purpose on that. So again, we have to go and do the certain recommendation, and as a result, we are able to navigate that is by imposing carbon tax. Singapore in the region is imposed a carbon tax. So that way deters some of the companies and that. But I'd like to say is specifically on a project basis comes, if you are having multiple projects, when you go for banks or when you go to the investors, they are not really that way. It is very hard to pull the strings along in line with the project and with the thing, and it is very hard for any government, sovereign rich government, even Australian government, it's not possible to impose on that actually on those. So the answer would be question is more towards in financial communities, wherever you are representing or you are everything, they have to ask, we as a coming from an MBA background and other thing, we have to see how we can lobby in and how make this awareness to be created in making a compensation. I think this is what I learned, see in your presentation, how they are trying to compensate to a certain extent. At least it's not a single digit, but at least you have something better than what you park your funds in the banks. Pension funds are phenomenally more funds is being parked, but pension funds, they themselves doesn't know how these funds can be scattered into it. But in between the intermediates, like private equity firms and all these things, they take it and they may want to make a delta and they are the one who is there. So more or less is pension funds are generally happy in a state of a single digit, like 8 to 9%, they should be happy on that. But it is going through a channel, right? It is a cluster of private equity firms comes into it, then it deters the purpose. Finally, the community is not, it's getting benefited, or neither it's only for a financial angle is there. And we have to see the bigger picture of planet and everything. With that,
We take a
last question.
quick question and quick answer, please.
Yeah.
I worked a little bit on distributed solar in Sub-Saharan Africa, and there we could see that distributed solar was only really becoming successful with the entry of companies that started using solar as a service compared to the industry putting up solar on their own or as part of their business model. Is that something that also happened in Southeast Asia, or?
Yeah, exactly. This model, what I propose is a leasing model. It's absolutely no investment is needed. So all we come up with the investment, you give the space, we will invest, and you buy the power for 21 years. That's all. That's what it is.
Okay, thank
Thank
you
you.
very much.
Thank you.
Naresh, for the insightful
Thank you.
presentation.